So I was at the gym this morning, and of course, while working out, I'm also thinking of real estate. And it just crossed my mind, what if I had $300,000? Can I grow that and double that? Can I double $300,000 in a number of years with my investments? So my question is, and of course I ask ChatGPT, can I get more percentage gain? Meaning, can I make more money by holding a $1.5 million home at 3.5% annual return? Meaning it's appreciating on average 3.5%. Well, of course, we know that the market can go up and down, and so there'll be cycles, but on average, if it grows by 3.5% annual appreciation, only 3.5%, and I had $300,000 put in, versus if I put it in ETF. For example, if I put $300,000 into ETF that's tied into the S&P, let's say, and it returns 4.25 every year, what would make more money? 3 years out, 5 years out, 10 years out. So I asked ChatGPT to do a 3, 5, and 10-year projection percentage as well. What is the cash on cash return? What's cash on cash? It just means the return on your cash. For example, 300,000, for example, if it's 300,000 in an investment, how much will it make cash on cash? If it makes 150,000, then that's a 50% gain. And if it makes another 300,000 from your original 300,000, then that's a 100% gain. So can you really double your money with investments? There's definitely not financial advice, but just something that ChatGPT has come up. Leverage is powerful because you'll be putting in a smaller amount, for example, 300,000 for a $1.5 million property. So you're holding a larger asset, even though your initial investment is less than the actual amount of the asset. Principal paydown builds equity. So every payment that you make towards the mortgage pays down the mortgage. Appreciation also grows your asset. So the asset will just grow with inflation and also the market. Rental income will create cash flow, cash inflow for you. And also there's tax advantages to owning investment real estate as well, as far as depreciation and expense deduction. Check with your accountants and financial advisors. And so I was really curious, and this is what ChatGPT gave me. So the home net gain, so the gain from an investment of a home, for example, if you put in $300,000 down payment on a $1.5 million home, the net gain would be $73,000. That's considering the mortgage deduction and payment as well, right? So this is considering a $45,000 annual payment to the mortgage. Your home net gain would be $73,000 in the first 3 years. And then for the 10-year projection, you're actually gaining $315,898. So that's a 100% gain. So let's look at a few scenarios here. So scenario one, it's real estate, buying real estate without rental income. So when you purchase a $1.5 million home with a $300,000 down payment, we can see here at 3 years, 5 years, and 10 years, that's your return. So it looks like after 10 years, you can see or estimate 105% cash on cash returns. So the $1.5 million property should net gain you $315,000 approximately. Scenario two, with the ETF investment at 4.25%. So this is sort of like a higher annual return. With the $300,000 investment in ETFs, after 10 years, you're looking at a $154,000 gain, which is a 51% return, which is really good as well. But with scenario three, which I haven't really mentioned, what if the property is actually an investment property and it's rented out? So real estate investment with $48,000 annual return income. If the property generates $4,000 a month in rent, so there's what you're looking at: 3 years, 5 years out, 10 years out. So 10 years out, that's a massive gain when rental income is included in this calculation. So of course, there's a lot of assumptions in here as far as interest rates. There's no property taxes calculated in here or maintenance, as well any additional fees for ETF investments. So if you're an investor, or even if you are just starting off, let me know, comment down below, and let me know what you think about this calculation, of course, from ChatGPT, just using AI to quickly do kind of like a numbers rundown for us. If you had $300,000 to invest, whether in real estate for a $1.5 million property, or maybe perhaps buy some stocks or ETFs tied to S&P. So there's a number of options here, but with real estate, you have that rental income that can be added on as well on your appreciation. So yeah, if you're an investor, not an investor, doesn't matter. Leave a comment below and let me know what you think.